Cryptos haven't been around for too long, but they're already making waves. Let's look back on the milestones that led to this trillion-dollar market. The first fully functioning cryptocurrency, Bitcoin, has been around since 2009. Ethereum, the backbone of decentralized finance, or DeFi, has a total value of $55.3 billion locked in DeFi protocols as of July 2022, and it has only been around since 2015. Despite the utter disbelief and poignant criticism dispensed by some, cryptocurrencies have attracted a loyal bunch of early adopters, and traditional investors, venture capital, and even retail are following suit. The history of cryptocurrencies goes hand in hand with that of blockchain technology. Without blockchain, the very proposition of a decentralized peer-to-peer cash system would not be possible. Despite these technological advancements existing many years before 2009, it was not until the context of the 2008 global financial crisis that the first cryptocurrency materialized. Before 2009, DigiCash. In 1989, David Chaum funded one of the earliest electronic cash companies, DigiCash. They created the first electronic currency, eCash, which bears striking similarities to modern-day cryptos. Unable to reach mass adoptions by banking institutions, the company went bankrupt in 1998, leaving an important legacy of encryption practices and formulas. B-Money. In late 1998, developer Wei Dai published a paper describing a protocol that would be able to provide services historically provided by governments, a medium of exchange, or money, and a way to enforce contracts. He describes a synchronous, anonymous, and unjammable broadcast channel, an untraceable network where senders and receivers would exchange encrypted messages using pseudonyms or private keys. The protocol didn't garner enough interest at the time, but it certainly influenced Bitcoin, as it is referenced in its white paper. BitGold. The idea for BitGold originated in 1998, but it was in 2005 that Nick Szabo published a paper describing a decentralized digital currency whose value would not rely on any trusted third parties, protecting it from inflation. BitGold would be created by an online protocol and, unlike precious metals, it would be unaffected by forgery and theft. It would also be safely stored, transferred, and appraised. Although BitGold was never implemented, it is considered to be a precursor of Bitcoin due to its proof-of-work consensus mechanism. Bitcoin. Bitcoin was created amidst the turmoil of the 2008 financial crisis, as trust in banks and the financial system heavily deteriorated. Satoshi Nakamoto, whose identity is still unknown, published a white paper describing a currency that would not depend on centralized authorities whatsoever, but would rather empower people through a decentralized peer-to-peer network. The first ever Bitcoin block was mined by Satoshi Nakamoto in 2009. In 2010, the first real-world transaction took place. 2 pizzas were bought with 10,000 Bitcoin. This date is commemorated by the cryptocurrency community as Bitcoin Pizza Day, mostly as an amusing reminder of how far it has come. By late 2017, the price had skyrocketed to nearly $20,000, making headlines worldwide before taking a plunge in 2018. Having drawn attention from big tech, institutions, and even countries like El Salvador, Bitcoin reached an all-time high of $68,000 in November 2021. Ethereum. Vitalik Buterin published the Ethereum white paper in 2014 and launched the project in 2015. In the white paper, Buterin carefully considers Bitcoin's limitations and presents Ethereum as an alternative protocol for decentralized applications. Unlike Bitcoin, Ethereum has a built-in programming language that allows anyone to write smart contracts and decentralized applications, including protocols like digital currencies and reputation systems. Thanks to smart contracts, projects have been able to create their own tokens and raise funds, especially during the 2017 ICO craze, where almost $5 billion were raised. Smart contracts have also allowed projects to build governance tools, publish and sell their digital assets, and power the decentralized finance ecosystem, which has attracted notable investors from the Silicon Valley scene. Beyond. Besides Ethereum and Bitcoin, the Polkadot, Cosmos, and Solana ecosystems are attracting an increasing number of software developers, similar to the way they flocked to work on internet-related projects in 1990s. There are currently over 10,000 cryptocurrencies and tokens in circulation, and Bitcoin's market cap is expected to grow to $400 billion by 2025.